Welcome back. There's some good news for South African consumers struggling with the cost of living. We'll take what we can get. Inflation easing to an 11-month low in April. The rate of food increases moderated, and the rate of all increases rather moderating to 6.5% from 7.1% in March. Food prices remain high, although there has been a little moderation there. This, of course, is a number that the Reserve Bank will be looking at when determining interest rates. We're expecting another rate hike, unfortunately, tomorrow. Let's speak to Maarten Ackerman, Chief Economist at Citadel. Joining me now. Maarten, is this good news? I mean, it's still out of the range. It's still above 6%, but significantly down, I guess.
Yeah, I think we're not out of the woods yet. So, we need to prepare for that. I think we did see the peak, and the rates are low, or the inflation is lower, as you said, 6.8 versus the 7.1 we saw last time. What concerns me is that if we exclude the volatile components, food and energy, the core inflation, that actually went up from 5.3 to 5.4. So the Reserve Bank will very much focus on that and say, well, we know that the volatile components like food and energy work out over time. But if core inflation is quite sticky, and you add to that the recent significant weakness that we saw in the rand, their inflation outlook going forward is probably going to be that it's going to remain sticky above that 6% target. And if that's the case, we can expect more hikes from the Reserve Bank. So for tomorrow, given what's on the table right now, I do think that we can prepare for another 0.5% hike to address the inflation number, or the expected inflation for the framework that they are looking for.
All right, so we understand the market has basically been pricing in a 50 basis points or 0.5 percentage point hike. You're saying this number isn't good enough for the Reserve Bank's MPC to rethink, maybe give us 25 basis points?
No, I think, to be honest, at the last MPC meeting, they really increased the inflation expectation towards the end of this year compared to what they had on the table at the beginning of this year. And on that basis, they decided to have the 50 bips instead of the 25 bips. Since then, what happened was that inflation actually moved higher, the actual print, excluding today where we dipped a little bit. And the rand had this huge impact, which I didn't expect at the last MPC meeting. So if they need to put all of that into the current thinking framework, then, there's no way that the inflation numbers that they had for the end of this year can actually be lower. And on that basis, I think it will be very difficult to actually only do 25 basis points, given the deterioration in the inflation factors. And that's why we are thinking of 50 bips is quite likely.
All right, so you spoke about core inflation and then the more volatile things like food inflation and fuel. But those, of course, are hugely important to the poor, who spend a lot of money on food and then, of course, getting to and from work. So that sort of cooling off that we're seeing in food and fuel, looking at oil prices, is it sustainable?
Yeah, so we did see quite a nice decline in fuel. That's now 5% year on year from about 8%. So that was a significant decline. Unfortunately, again, that is before we saw the weakness in the rand recently. So it is quite likely that our fuel, call it energy component in the inflation basket, is likely to go up again. The impact from the recent increase in the rand you will only start to see on fuel prices in the next 3 to 6 months as we import crude. So that is also going to remain sticky. Food inflation still sitting about 14% compared to a year ago. That is quite high. For some reason, we haven't seen a similar decline on food commodity prices compared to what's currently the trend globally. And that's, like you are saying, that is the two components that is probably much bigger in lower income consumers' baskets. So they are impacted in terms of probably a higher cost of living. And then on top of that, anybody that do have credit or debt to keep the cost of, or to keep their living standards the same, are faced with the potential of another increase in interest rates.
Yeah, and we'll look at that. My final question, obviously it's very difficult. The rand linked to the dollar, that affects imports, a lot of things that we use for goods and services. But do you see a point at which the Reserve Bank gets on top of inflation and we see interest rates even coming down? When could that be?
Yeah, I still think that, if you look at the monetary policy framework, they do see that inflation is getting below the upper 6% target. Going into 2024, that will definitely pave the way for them to take it easier on interest rate hikes. What we are dealing with right now is that some of the headwinds are just a little bit stronger for a little bit longer. And while that's the case, they might need to hike another aggressive hike and also keep it at those levels. The factors that are driving it right now, like we've mentioned, is obviously the rand. It's one of them. If you look at the outlook for the rand can still go to 20 to the dollar. I think that is likely in a global risk-off environment. It depends on the play out of the current geopolitical issues that we are facing in terms of the relationship between South Africa and Russia and the US, questioning some of that. But it's also related to the regional banking crisis in the US. If that continue to deteriorate, the rand can certainly go to 20. To the dollar in the medium term, that will obviously keep pressure on inflation, and that's a scenario that the Reserve Bank will need to take into account. But then probably heading into the back end of this year, even if this risk premium remains in the rand, the dollar is going to start to run out of steam. Next month is probably going to be the last hike in the US hiking cycle. So as we approach the back end of this year, I do think the dollar will start to ease, and that will be a bit of a tailwind for the rand. So that is also a scenario that the Reserve Bank will take into account. Having said all of that, the Reserve Bank will get on top of inflation. They're very serious about their inflation target, and that is why they acted very aggressively or more aggressive than most people expected at the last meeting. It is now just a matter of time or changing that peg in the ground when they expected to get under that target. That is probably going to take a little bit longer. And that just implies that we are going to see rates a little bit longer than most people expect at this point in time, until they do succeed to get it within the target range.
All right, at least some sort of end is in sight, the light at the end of the tunnel, some would say. Maarten Ackerman, Chief Economist from Citadel.